Our weekly market update for the 9th of May 2012 comes straight off the RP Data May report, which was into us just a few days ago. In fact, it might have been yesterday. So let's run through some of the stats that have just come through. First of all, the values are down across each of Australia's capital and the cities in the past year. Interestingly enough, if you look, Adelaide is dead centre at minus 4.2% of capital growth over the past year. The dwelling values are up by 0.3% though over the past 3 months. And there's Adelaide sitting in the middle again at 0.7% over the previous 3 months in growth, which is a really, really good sign, and we're tracking well based on the national. The property values across each capital city currently sit at levels below their peak, and at the moment we are in Adelaide at 4.7% below the peak price as a capital. And as you can see, that is even on the lower end of the drop. So once again, Adelaide's proving itself as a very solid and a sound place to be investing in property. Following on from that, Adelaide has recorded a similar performance to that of the combined capitals over the past year. And as you can see, that Adelaide, in its black line that runs through that graph, is tracking very, very well on a national scene. Hence, people are always interested in investing in Adelaide because of its consistency. Now, Adelaide sales volumes, which is another interesting factor because that is the number of people that are actually selling their properties, does trend lower and well below average levels. So that is actually on the lower level nationally, which means fewer people are moving within Adelaide. And that in some ways is what is reflected from the point of view that people in Adelaide are independent and able to withdraw their properties and not sell if they're not achieving the prices that they're after. So volumes are down. With regard to rents, for those of you that may be tenants or landlords, yields have improved over the year as values have fallen on the properties in all capital cities. So rental yields are starting to show positive signs and they're heading north. With regard to listing numbers, the number of properties on the market, they've elevated, but they are lower than last year's highs and have started falling. So trending very positively in terms of future. So that ends our report, and it's the RP Data Market Report will be available on the blog. So I look forward to you catching up with the entire report by going to our TOOP blog.